Welcome everyone. Welcome to this conversation. I have with me Mr. Vishal Narnolia, and today we are discussing Tata Capital IPO. There's a lot of buzz about this IPO in the market, and everybody is wondering कि क्या होगा, क्या है, क्या company है, what are the financials, and we are gonna discuss all of that, especially because the pre-apply for the IPO has already begun. So, Vishal, let's get straight to the topic. What can you tell us about this company? What are some of the things that one must know if they are thinking about this IPO?
See, Tata Capital is basically an NBSC, which is a subsidiary of Tata Sons Pvt Limited. Now, this company was formed in 2007, and it is across financial products ranging from, say, home loans, LAP, auto loans, MSME loans, in fact, for that matter, corporate loans also. So they are offering a wide range of financial products and services to retail, corporate, as well as institutional customers. To get some figures, AUM for Tata Capital as of say June 2025 stands at 2,33,363 crores. And so far as distribution is concerned, so Tata Capital has currently 7,516 branches, which are present across 27 states and union territories. Talking about the customer base, they are currently serving approximately 73 lakh customers, and they have a pan-India network addressing most of the financing needs so far as customer point of view is concerned.
Right. Of course, finances are one of the most critical things that are looked at. What about the finances of this company? How good are they?
So see, as far as financials are concerned, the first thing which anybody would like to see is about the growth. So as I said, the AUM as of June stands at 2,33,363 crores, which is diversified across segments, and no one segment crosses a mark of 20% so far as its contribution is concerned. Now, growth aspect. So for the last 2 years, they have reported a 37% CAGR growth in their AUM. Obviously, it is including the merger of Tata Motor Finance Limited also, but still there was a decent growth so far as an NBFC is concerned of this size. If we talk about, say, profitability, they have delivered an ROA of, say, approximately 1.8% in FY25 as of after the merger. But before the merger, if we consider FY24, their ROA, that is return on asset, was 2.3%, which is decent enough. Asset quality, which is one of the important matrices when we talk about any lending business. So in case of Tata Capital, their net NPA has been 1% or below. So if we talk about FY23, it was at 0.4%, FY24 again at 0.4%, FY25, that is after the merger of Tata Motor Finance, it was at 0.8%, and as of June in quarter first, it was at 1%. So all throughout, they have tried to maintain their asset quality with net NPA of 1% or below it. So primarily, you have growth, return on asset, or profitability of approximately 1.8 to 2.3% range, along with a prudent asset quality, wherein, as I said, the net NPA has been 1% or below it.
Right. Great. So, if one is looking to invest in this IPO, what should their investment rationale be?
See, so far as investment rationale, the very first rationale which comes to my mind, or I guess any investor mind, should be the strong parentage which the company has, along with a seasoned leadership. So that gives you all the three: strong parentage, seasoned leadership, as well as a governance in oversight on the company. Apart from it, if we dwell in the business of the company, first thing is diversified product mix. As I said, that they cater to retail, SME, as well as corporate clients with approximately more than 25 plus lending products. So well diversified in terms of product profile. Next comes is the distribution, because every lending company should have a proper distribution mode. So far as Tata Capital is concerned, they have a well diversified omni-channel network of approximately 1,516 branches, which are spread across 27 states and union territories. If we talk about geographic spread, then they have nearly 42% of branches in South, nearly 23% in North, 19% in East, and 15.6% in West. So fairly distributed model so far as branches are concerned. Apart from it, they also have DSA tie-ups, fintech tie-ups. So overall, an omni-channel distribution network. Further, if we talk about asset quality, because without asset quality, a discussion on any lender will not be over. So they have a product-centric underwriting for customized credit solution, and which is evident from the NPA figures or NPA trends, which I have already mentioned, that the net NPA has been 1% or below throughout, even considering the merger of Tata Motor Finance. Lastly, apart from all this, we also investor can look at diversification or granularity in terms of its AUM. So 80% of the book is secured and 98% of loans are with a ticket size of 1 crore or less than that. So the book is fairly granular and diversified. So all those things, that there is a strong parentage, you have a diversified AUM with granularity, phygital distribution network with 1,516 branches across the country, and a product-centric underwriting model for customized credit solution. All these could be thought upon points as rationals.
Right. Well, that was all great to hear, but whenever we are talking about investments, of course, we have to talk about risks. So what are some of the key risks that one must consider before investing regarding this IPO, of course?
In Tata Capital, so far as risk is concerned, see, they have a substantial proportion of unsecured loans, which is at 20% of AUM. Though this proportion has been coming down in the past 2 years, but still one has to keep a note of the exposure so far as unsecured loans are concerned, especially at the time of volatility so far as asset quality is concerned. Secondly, their PCR or provision coverage ratio has been on a declining trend for Tata Capital. Currently, the PCR as of FY25 stands at 58.5%, and so far as June 2025 is concerned, that is Q1 of FY26, the PCR is at 53.9%. So this has been on a reducing trend, partly because of the merger of with Tata Motor Finance. But one has to keep in mind that PCR is cushion against any potential credit losses. Basically, these are the two risk factors which an investor should keep a note as before decision making.
Absolutely. All right. So summing it up, can you tell us some of the highlights, maybe the top 3 or 5 things that one should consider while thinking of this IPO?
As I said, that so far as the IPO is concerned, or the company is concerned, the lender is concerned, basically one should keep in mind the parentage, because that's a strong brand, and the seasoned leadership it has. Apart from it, as I said, growth perspective, there is a 37.3% CAGR growth in last 2 years with a decent AUM size of 2,33,363 crores. Along with it, it is offering a diversified loan book with granularity. As I said, 98% of are with a ticket size of 1 crore or below. So in a nutshell, you have strong parentage, diversified and granular AUM, which is spread geographically across India with 1,516 branches, and at the same time, continued focus is there on maintaining asset quality, which is evident from the fact that they have a net NPA of 1% or below in say 23, 24, 25, and now in Q1. So in nutshell, you have everything: growth as well as a prudent asset quality metrics.
Absolutely. Well, that was certainly very insightful. Thank you so much, Vishal, for your time. For our viewers, if you have any questions, please put them down in the comments, and also please tell us if you'd be applying for it. Thank you so much for watching.
Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.